Good afternoon, everyone. Mike and Corey here on this Friday afternoon, looking at markets in the green after kind of an ugly week. We'll break out why it's up today with rebounding, not fully picked up everything that dropped on Wednesday, as well as an article on the number of millennials that have over $1 million saved in their 401k. And then Corey's going to talk a little bit about countries and as far as what else, the GDP. Are you gonna?
The industry, just we talked the other day about the U.S. outperformance, particularly over these last couple decades, last 15 years. And I was going to show you a couple of countries out there and what the makeup of their stock market or economy is compared.
Yeah, that'll make you think over the weekend when you're playing Risk with your kids, like what countries I want to take over, right? But
Hey,
let me.
hey, you know one of the top performers this year? There's a few
Brazil.
countries that I haven't looked. No, I think Brazil had a rougher go of it this year, but it
Oh,
is
okay.
close. Argentina. I think
Argentina. They
they're
got a
one.
new
They're like
they got a new
top.
president. I know
Yeah, they're
David's a big fan, so
they're making moves. Oh, really? Yeah. Well, their stock market is a fan.
well, let me say, this is an educational presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So let me share my screen and show some green numbers. Yay! If you hopefully you didn't look on Wednesday when the Fed released their information and said less rate cuts for 2025, the market sold off. Today we're getting I'd say about, it looks like at least half of it's bounced back. I'm going to pull up the S&P 500 and just show like a 5-day graph so you can kind of see the way this comes out. If it refreshes here quick enough for me, I'm not sure why it's not. Um, well, actually not displayed. So, well, let me jump to why it's up today. So the reason why is the inflation rate that the Fed looks very closely at, the PCE, showed a 2.4% increase over last November, and that's lower than expected. You're like, oh, it went up by 2.4%. I don't want any inflation. They expected it was going to come in more like 2.5. So it's not it's not huge, but I mean, hey, the good news is it's not higher than expected, or the market might have sold off more for all we know. So this is good news. I mean, this is the biggest thing with the Fed rate cuts for next year. If the inflation is under control, I mean, there's an opportunity for rate cuts. If inflation's out of control, there's definitely not. So, good news. The inflation is getting closer to the target rate of 2%. And just remember, inflation's never really a good thing. You can manage inflation, you can't manage deflation, and that's why the Fed likes just a tiny bit, a 2% inflation rate. The other article, kind of a positive news, and you see this, and it's kind of I'm going to call it the law of small numbers, but the number of millennial, so that's ages 28 to 43, 401k millionaires jumps 400%. You're like, whoa, that seems like a lot. Well, first of all, if you're under 43 and you've saved over $1 million in your 401k, congrats, that's absolutely incredible. You must be working a corporate job, probably getting a good company match, invested very aggressively to get that far that fast. Anybody that saves up that much by age 43 is well on their way. But when I scroll down and look at it, 400%. So it makes it sound like, oh, there's a million of them, but there's not. It went from 2,000 up to 10,000. Now that's a good jump. It did multiply, by 5 times, but still that is, 1.8%. So a very small amount. Also, it means probably you've worked at the same company, because I know a lot of times when you switch companies, you'll roll your 401k over to an IRA, so you have more flexibility on investing. You typically there's a few reasons why you might roll to your new 401k, but typically, at least in my past, I've rolled to an IRA so I can do whatever I want on the investing side. And of course, the market has been fantastic, up 29% the Nasdaq since as of December 19th, 23% for the S&P 500, and who cares about the Dow? So good news, continue to save. I will always say, you always want to put in to get that match. Whatever your company will match, that is an automatic free 50% return, 100% return the first day. No investment can ever beat that that we can make. So you always want to get that 401k match. So with that, I will turn it over to Corey, and he'll talk some of these other countries.
Yeah, we don't have time to go all the way around the world, but I do like to travel. Let's start at home. Let's start there and kind of see what this is. A pretty current look at the S&P 500. So the focus of our economy, our stock market, and at least 32% information technology. Then you got 13% financials, healthcare, consumer discretionary, communication services, and on down. So you can see those top holdings there. Here's a look at the U.S. stock market over time. I like these kind of sector weightings over time charts, pretty cool. But you can see that over the last 30 years, information technology was, in the 90s, it was less than 10%, probably about 5%. And we did have that tech bubble. It got close to 30%. I remember it. But now it's back to 30%, not in a bubble, though. It's justified. What, Mike? Were you going to say something?
I said I remember that. The pets.com, Yahoo was worth more than all of the automotive manufacturing in the world. Yeah, I remember that bubble.
Well, so that our top industry right now is a high margin, high growth potential industry, and those companies are pretty high quality. They are a little bit vulnerable in economic slowdowns. If ad spend, there's been a few of them have gotten more and more dependent on ad spend. Google, Meta, Amazon, Netflix, they're kind of increasing their dependency on ad spend. So there is some economic sensitivity there, but very high margin businesses, and if their margins fall for a couple of years during economic slowdown, doesn't really mean that the company is in huge trouble, really. All right, let's go over to Germany. So we'll go through some European countries. Again, not all of them. Information technology in Germany is 18%. This is the DAX. It's an ETF, German ETF. But number one there is financials, 20%. And for us, it's 13%. So a little different industry, an economically sensitive industry for sure. Let's go to UK. The UK, they're 22% financials, but they do bring in consumer staples. A lot of that there is LVMH, a really big company in France, and our biggest company in France, and a high quality company at that, global. So that's pretty neat. Let's look at, this is the FES, so the Euro Stoxx 50. This is like the Eurozone, a little more diversified than just one country. But you're still that. So Europe, you're seeing a dependence on financials, an economically sensitive industry, not a super high innovation industry, typically a low multiple industry valuation wise. So not ideal for your country to be driving returns and growth. But also, they're good, solid companies. Let's go to Australia.
Look Australia, financials. Wow, that's a big one.
What about that? So you've got really close to your 60% of your, public markets are about financials and materials. Materials would be very cyclical. If you have a slowdown in production or demand there, I mean, you are really vulnerable to slowdowns. Interesting. Let me see. I think I had one more. Oh, Hong Kong. Hong Kong, it has its own market, and you've got insurance, financials, about 40, close to 40% there. Real estate management and development, that's also, an economically sensitive part of the market. And, in China, there's been a lot of subsidized real estate development, and some of that has ended very poorly. So, I mean, and then you've got banks, utilities. It doesn't, not ideal, not ideal. One thing that is interesting about the EWA, I think this is EWH, that it is interesting. It is a, a broad-ish, I don't know, not totally diversified, but an ETF for those companies in Hong Kong, and you can get it. You've got currently, you'd be getting a 4.5%. Yeah, that'd be like, what if the S&P 500 had a 4.5% dividend yield? That would be pretty interesting to me. But different company makeup, different industry makeup, probably not as interesting as if the S&P were at that level. Sorry, going a little long here. Then hopping over to Argentina. I figured we got to grab one of those top performers. Argentina, consumer discretionary, so they escaped. Financials weren't number one. Consumer discretionary is 1/3, and a lot of that is Mercado Libre, based out of Uruguay, and that is their. I mean, that's, I think, 18% of the economy, and growing quickly. So I would like to own that company. Don't own it, but I'd like to if we get a good sale there ever. But anyway, interesting stuff.
Very interesting. Yeah, it's amazing when you think about it. The United States with information technology, and certainly when you think of the Apples and Amazons and Googles of the world, you can understand that. But I just have to believe that a lot of other countries are like, hey, we're going to take some of those financial dollars that we're receiving, because that's their big business, and where would we want to invest those? Well, when we looked earlier this week, we can see that 60 to 70% of the world market cap is the United States, and its biggest piece is information technology. So, very cool. It's just interesting, and we will continue to invest heavily in the United States. I don't foresee that we're going to shift our investing to go overseas much. There may be some small opportunities here and there, but I think there's a safety knowing what we're the business here. So with that, Corey, I got snow outside. It snowed this morning here in Ohio. Maybe we're gonna have a white Christmas up here.
Hey, do you have any tricks for or to-dos or not to-dos if I've got some like little frost or ice on my windshield?
Start your car and let it warm up. There is a trick, or park it in the garage. There you go. Clean out your garage and park it in there the way where cars are supposed to go.
But then where would all of our Christmas decoration boxes go? We can't put those outside.
Oh my goodness. Well, thanks everybody. Hopefully next week, it will be a short week. We will not have that many shows. The market's not open all the days next week. So stay tuned. We're going to hope for a Christmas, Santa Claus rally here at the end of the year. I don't know if we're going to pull out a positive December. We're down a few percent, but I know a lot of people will be on vacation. So have a good one. Have a great weekend. Bye.